Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of big business documents so you don't have to. Ever wonder what companies are really saying in those massive reports? Well, buckle up. Because today we're diving into a filing that might seem about as thrilling as watching paint dry. But trust me, there's money and moves to be found here. We're looking at Federated Hermes Money Market Obligations Trust's latest filing. Think of it as a health checkup for a bunch of their money market funds. These funds are supposed to be super safe places to park your cash, but let's see if the numbers back that up. What's interesting is that we will try to figure out if they can really keep their promise of stability. This filing is basically a shareholder report. It tells investors how the funds are doing, what they own, and what it costs to run them. It covers the 6 months ending in January 25 and includes reports for several funds, such as Federated Hermes Capital Reserves Fund and Government Reserves Fund. First up, let's check out the Federated Hermes Capital Reserves Fund, ticker symbol FRFXX. This fund is only available for natural persons, which is just a fancy way of saying regular people. The report states that a hypothetical $10,000 investment cost $52 in fees, or 1.02% of the investment. It had about $3.1 billion in net assets and held 68 investments. It seems like a safe conservative fund, as you might expect. Now let's look at the Federated Hermes Government Reserves Fund Class A shares, ticker GRAXX. A $10,000 investment in this fund cost $44 or 0.87% in fees. This fund is bigger with about $6 to $3 billion in net assets spread across 84 investments. Since it focuses on government bonds, it's generally considered very low risk. The expenses for the Class C shares were $64 or 1.26%. Now let's move to the Federated Hermes Government Obligations Tax Managed Fund, Automated Shares, ticker GWIXX. A $10,000 investment cost $28 or 45.5%. This fund has $7.4 billion in assets across 69 investments. For the institutional shares, it gets even cheaper, just $10 to manage $10,000. Next, let's consider what these funds actually hold. The Capital Reserves Fund, for instance, put 37.2% of its money in commercial paper, which are short-term loans to corporations. They invested in sectors ranging from aerospace to banks. The government fund is mostly about repurchase agreements, where they buy government debt with an agreement to sell it back soon after. In a nutshell, the fund makes profit on very short, tiny movements. Now let's decode the financials in detail. A lot of investment income comes from the instruments they held. For instance, the investment advisor fee was $2,653 and $937, while they waived $694,728 of theirs. And $1,769 statement of changes in net assets is also interesting, since it shows the overall income over 6 months and the changes info and numbers. Overall, the income generation has been stable. Okay, time for a quick detour into corporate governance. The report notes that in October 2024, there was a shareholder meeting where trustees were elected. Nothing too spicy here, just the usual process of shareholders exercising their say in who runs the show. The board has also reviewed and approved the advisory contracts with Federated Investment Management Company. The main point here is that the board found the fees reasonable and the services adequate. Now let's zoom out and put this all together. Federated Hermes is basically running these money market funds for its customers. They need to follow certain regulations, keep things safe, and provide some return on investment. The goal here is stability of principal and liquidity. This filing is their way of saying, hey, we're doing what we promised. The financial highlights show how the fund performed each year. Key things to note are the net expenses a bit above 1% and the net income being around 4%, but these are also just money market funds. They are supposed to be low risk, so these are pretty solid, and the funds are doing their jobs of making safe returns. It's a reminder that this report should be read with the fund's prospectus, which has way more details. There's also some fine print about householding, which is a way to reduce costs by sending fewer copies of documents to households with multiple shareholders. Now, what's my take on all this? Well, if you're looking for a super safe place to park your cash, these Federated Hermes money market funds seem to fit the bill. They are very conservative and have low costs. However, the financial world isn't a perfectly smooth sailing. One of the risks is that you could lose money, but in general, these are very safe. You do need to understand it is possible to lose money. These are not FDIC insured. So this means that there are many factors that are out of their control. I do believe they are doing a good job and are capable at their roles. Thanks for watching. If you found this breakdown helpful, give us a like, drop a comment, and definitely subscribe so you don't miss our next corporate deep dive. What company or report should we decode next? Let us know down below.